Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 14th of November, the King's birthday. Starting off with the FTSE 100, which is stuck in this range between 7,300, that uptrend line there from March, and recent resistance 73 or 74.90. Looking for a breakout either way. At the moment, the RSI just below the neutral 50 level, so slight bias to the downside, but really a market that's not really doing very much at all. The 50 and 200-day lines both falling, which is not great, so that's pressuring the market, but so far it's managed to withstand the negatives there. The DAX is next and looking rather better than the FTSE. We've had the bear trap island reversal for October and early November, and we've actually broken through both the 50-day moving average, 15,300, and that line of resistance there from the turn of August, around 15,350. Above that August line, we're looking for the 200-day moving average around the 15,600 level, which would take us back to where we were basically in late September. The Dow also mirroring what we're seeing at the DAX in the sense that we've broken the summer resistance line there. That was around 34,100. Above that, looking for 35,000 by the end of this month, and not expecting this market to go back below the current position of the 50 and 200-day moving averages around 33,800. Moving along to the Bitcoin situation here, slightly softer, but still above the initial November resistance there, 36,000. While we're above that, feeling pretty chirpy and looking for a relatively smooth and quick move towards 43,000 and that 1-year resistance line. Otherwise, there might have to be some jiggery-pokery between 34 and 36,000. The late October, early November congestion area before we head higher. But at the moment, a market that's just winding down the recent overbought RSI situation. Moving on to the stocks, and an interesting one to start in the form of Allergy. Here we've got a situation where the shares have gapped up. Obviously, they haven't had a great run if you look back for the year to date. But we had a couple of things of interest here. A bear trap from below the late September support there around 1.4 pence, and then we also had actually a gap close buy signal that was on basically the 9th of November. And if you've been eagle-eyed and bought there, you'd obviously be rather happy now. Current situation is that we're just coming against the August resistance line and the 50-day moving average around 1.8 pence, and looking for an end-of-day close through that, maybe 1.9 pence, to give us a return back up to the old support there at 2.3 pence, hopefully by the end of this month. Want to see the shares remain above resistance on the way down around that 1.6 pence area. So a little bit up in the air at the moment, but looking relatively encouraging, especially if we can break that 50-day line. On to Artemis, which I've looked at quite a few times in the recent past, largely on the basis of the gaps that we're seeing on the chart. You could argue that this is a bear trap island reversal from below the 200-day line, the black line there around 1 pence. But a new gap higher today suggests ongoing strength and a minimum target here by the end of this month, up to 2.2 pence, and the top of that rising trend channel from back in December. Stock that I don't normally look at because it's sort of bigger numbers, but it's not a penny share. But Billington here, bear trap gap reversal from below the old support there, the June to August support around £3.19. Above that, we're looking for a break of the old May resistance line there around £3.63, and the 200-day moving average to take us up towards £4, ideally by the end of this month. If you're cautious, you wait for an end-of-day close through that 200-day line and that May line as well. On to the Aquis market, which I suppose somebody has to look at, even though it hasn't covered itself in glory in recent years. Here you can see that we've got EDX Medical Group, which is doing very well indeed. We've got this broadening triangle that we've had in place since November. That's heading for 7.5 pence, and we're looking for that well before the end of this month. We've had a golden cross between the 50 and 200-day moving averages, unfilled gap to the upside, which we had last month, which was really the starting gun of the rally, and a sideways shuffle above that rising 50 and 200-day moving average configuration. So looking for 7.5 pence, at least while we're above recent support, around 4.5 pence mid. Next stock is not enough vertical order, Bushveld Minerals. Here you can see that we are nearly up to our initial target here, around 2.2 pence. Above that, we're looking for a fresh move up towards the 200-day moving average at 3.25 pence. That's also the top of a post-July broadening triangle. Nice turnaround here, which was started and triggered by the bullish divergence late in October, multiple bullish divergence points, and then the break of that resistance line there from July around 1.4 pence, so 1.4 actually the entry area for this particular situation. On to GSTechnologies, where the shorters have been trying to call it down, but the shares so far have managed to at least hit the target we were looking for, which was the red resistance line there on 1.8 pence. Ideally, the shares will stay up above the resistance on the way down around 1.3 pence and then make their way to retest the 2 pence area, ideally by the end of this month. The other point to note there is that the 50 and 200-day moving averages are both rising, so we're probably just a few days away from a golden cross. And obviously, already the run up to a golden cross has been the strongest part of the cycle. We're hoping for more in that vein over the near term, but we need to hold above that 1.3 pence area. More obscure situation coming up next, Intuitive Investments. And here we've got this stock in what looks like a mid-move consolidation, so between 13 and 15 pence. Above that, looking for as much as 22 pence if we can get an end-of-day close through the 15 pence level. We had an initial target there around 16 and 3/4, but looking for up to 22 pence by the end of next month or even sooner, while we remain above the 12.5, 13 pence mid-price zone. Big news from Kodal today with the JORC resource expansion, and we've got this V-shaped bull flag here, gapped up as well, which is a good sign and a sign of people being caught on the hop with the latest news. We've also got the 50 and 200-day moving averages rising, and they're very close together, so probably just a few days away from a golden cross, and still looking for the shares to hit or retest that April resistance area around 0.9 pence as soon as the end of this month, while we remain above the recent swing low around 0.62. Next up is Marula, which has done exactly what we wanted it to do, which was deliver a bear trap reversal from below 8 pence. End of day close through 10 pence gave us the big move yesterday and today, and we're looking for the top of that broadening triangle there from back in March, as high as 18 pence, hopefully by the end of this month. So it looks like Quinton and the team and Jason and the team doing well on that particular situation. Upside value while we hold above today's intraday low around the 11.3/4 pence level on a mid-price basis. On to Ondo, which has had big news today. Bagged the big deal, the Fortune 100 company. Here we see the shares gap through the 50-day moving average and looking for a clearance of October resistance around 29.25 to take us up to as high as the top of that rising trend channel there from back in May up to 42 pence as soon as the end of next month. Ironically, I was going to look at the shares yesterday thinking that they may have found support, but maybe that would have been a bit too jammy in terms of what happened today. On to Premier Miton, which I don't think I've ever looked at before. Here we see the shares potentially turning around in a broadening triangle, which has been in place since last month. Initial target here, the 50-day moving average at 58 pence. And then after that, maybe we're looking at an upper parallel of that, up as high as 66 pence by the end of next month. Ideally, the shares stay above resistance on the way down at 52 pence on an end-of-day close basis. The whole move backed by bullish divergence versus that lower low that we had at the turn of this week. On to the last few. First one is Revolution Bars, where looks as though we've just got the first signs of a broadening triangle base, and the top of that triangle heading for 4 pence, which hopefully we could hit by the end of next month. We've also got an uptrend line in the RSI window as well, which has been in place since basically September, so that may help drive the momentum in this situation. It was obviously a beaten up stock, but good clear candles there, blue candles there over the recent past. Finishing off with the last two, here we've got Saietta, and here you can see that the shares have followed up on yesterday's bear trap gap reversal, one of our favorite setups. We've broken yesterday's high, so that suggests that we can at least head up towards the 30 pence level, which was the previous support for the stock. back in September, and looking for that well before the end of this month, while we're above the low of yesterday around 21.5 pence. Stock which has been in the wars of late is Westminster Group, but just the first signs of a turnaround here. The shares have gapped up at the end of last week, a bear trap gap reversal, which is, as I said, is our sort of go-to setup, and above 1.15 pence, we're looking for at least the 200-day moving average at 1.45 pence. Big picture target maybe sometime in January up to 2 pence if we can follow the latest stirrings near the bottom of the range. That's it from me today. More updates tomorrow.